Good morning or good day. Like every business day to the same time, real-time daily trading ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, every day, 15 to 20 minutes. So let's have a nice start like every day. And today it's Wednesday, 1st of August, 2018. And we will start like every day with our risk disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposits if you're a professional client. If you're a retail client, that ended because now the new ESMA regulation is in force. So a retail client can only lose the maximum of his account balance. From now, ESMA regulation comes into effect in the whole European Union, also here at Admiral Markets UK. So from now, it's also important to check out if you are a retail client or a professional client. All in all, if you like to read the full disclaimer and all about retail clients and professional clients, just go on our web pages, for example, admiralmarkets.com, and you will find everything written down there. Yeah, like said, retail client, professional client, different levels of protection. Retail clients' maximum risk is the account balance. Professional clients will get at Admiral Markets an additional protection because of our negative balance protection policy, a protection of 50,000 British pounds, what is round about 70,000 euro. More about that if you have questions. Ask a question live in the webinar or find all written down, like I said, on our web pages. Here, more about ESMA. The old way, the old world for European Union for CFD trading was if you traded, for example, DAX 30 with a 12,000 points quote for the DAX. You just needed with a 500 leverage 24 euro for the margin requirement. And now with a maximum leverage of 20, you need 600 euro. Same picture with euro dollar. And if you like to read more about that, like I said 2 times already, just visit our web pages and you will find more about that. And also if you're a professional trader, how to apply to get the professional client status. You need some criteria to fulfill. Everything here we are that link to find on our web pages. This is me. My name is Sens. I'm a German guy, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's day. On Tuesday, it's Paul's day. Like today, it's Giancarlo's day. On Thursday, it's Marco's day. And on Friday, it's Dirk's day. Our leading day traders live every business day, every trading day to the same time. And of course, if you like to trade Forex and CFDs, you get many benefits only with us. For example, DAX 30, one of our best sellers, do a spread of just 0.8 points during the main trading hours. Same with euro dollar. Actual typical spread is just 0.8 pips right now without any additional commission. Check all that out on admiralmarkets.com. They can also see how to contact us. You can call us, you can send us email or visit YouTube or Facebook. Everything, of course, is linked from our web pages. Same like our regulatory background. And now enough from my side. Now it's time for the market screening. Giancarlo will now take a buff. Hi, good morning, good day, Giancarlo. What's your view to the markets today?
Good morning, traders. Good morning, gents. We start this August with a lot of answer in our mind because we have some problem to understand for to have a good view of this month. In these days, I have seen a lot of problematic in the market. First one, we have low liquidity due to the summer for vacation and in general high volatility. This is a not good sign, and we increase the possibility of a new sell-off in the market. Of course, we have to understand that we have some macro factors like increases in income interest rates, heavy dollar, and trade war that undermine the strength of US economy. In the same time, we have to understand that the trade war could be an even more destabilizing factor because it is not officially declared. We take some news from market, but we have nothing official. So you can understand that this macro data will cause great uncertainty on the markets. The result is damaged confidence, collapse of competitiveness, and of course, a great problem with the exports. I would like just to know that the President of the United States last Friday is announcing that the gross domestic product of United States could reach 80% or 9%. That is a little impossible due to the some problem that I explained now roughly. In the first one, you have to understand that the last data of GDP of 4% is the first part of fiscal reform of Trump, but companies, of course, have more money to invest. In some cases, they also increase the wages, and in this way, the citizens of USA have an additional income to be able to enter in the real economy. So we know that with the increase of consumption, we have this great number in gross domestic product. But in the same time, if it is true that companies and people pay less taxes, it's also true that the government receives less money. And in the same time, the USA government has not cut spending, which means that looking at all revenue, there is less money to make the same investment in the future, to do the same expenses and even pay rising wages. Resulting in over years, we can have a new boom of deficit that, of course, strong impact on growth. This introduction, it is only to understand what we have to see in next weeks, and of course the focus is always the focus is to maintain, of course, on Federal Reserve. Today we have a lot of very important news. First one at Q4 ADP employment change. This is very important to understand what happened, or to have a little view of what is the number of jobs created from United States this Friday with non-farm payroll. At 4 o'clock, we have very important data of ASM manufacturing, PME, and of course, we have the gasoline crude oil stock change, and the most important, the Fed meeting. I have to remember that in July we don't have the speech of President Jerome Powell, but we use this meeting. We don't expect anything new. We don't expect a rising of interest. The investor want to understand if in September, of course, we could have a new interest, new rise of the interest rates. So now today we are going to start with oil, because we have touched a very important level. In this case, I would like to remember that the trade dispute between USA and China have its impact on price of oil, and we have to add to the global economic slowdown and the pressure of Fed. We have assisted in these days a touch of this very important resistance here. And we have assisted enter of smart money here near 71.53, and of course now we have assisted as British acceleration and British pressure try going price today after we have lose this resistance. Here we have recommended last week to take a look at these zones before to buy. We have some point to take in intraday session, but a lot of volatility. It's not good for our trading. And in this case, we are very near this zone 68.72. I have written here key level because this zone between 60.90, 67.62. This is our key support. If we have a strong breakout of this zone, we can assist a new downtrend in oil. And in this case, we are going to touch at least this zone in 66.60, and in extension, the other very important key zone is this 64.22. If we lose this zone, you have to understand that in the long term we can assist at a total reversal, and in this case I would like to take a look at this zone today and next day, because we can have a very interesting short position if we break out this zone. At the same time, interesting long position start only if we recover this the level of $70, and of course we assist at least a high volatility and presence of volume. Now we're going to take a look at gold, because I have started with commodities because we are near a very important zone. Gold, we know that gold markets maintain the zone of 1,217, and we know that the long term is bearish, but I think that in this moment we are assisting at least at a little accumulation. We cannot confirm this because I know that the traders waiting the touch of this very important long-term support here is this psychological zone of 1,200. But take a lot of care, because in case we have a strong breakout of this level today, or in extension we lose the minimum of these days here, in 1,210, I think that we can have a newer bearish pressure, and we can arrive here in extension in this zone. Take a look at this zone. I write here at the same time key level, because you have to understand that this zone is very important, because in the long term, if we lose this level, we are start a new downtrend with a target in $1,000. I would like to remember too, at the same time, that gold markets is sensitive to Bank of England, Federal Reserve, and of course the jobs number of Friday. So waiting the news, don't trade before this in news of Fed and non-farm payroll, because could be very complicated. We know that the dollar, the gold is sensitive at the movements of dollar, and if we want to try some buy operation, with a lot of caution, of course, we need at least a breakout of this level. It seems that here we have a sort of pattern, bullish pattern. So in case we maintain the price up this level in 229, we can try some buy operation with first target here in 235 and in extension in 243.40. I remember, of course, we are speaking about pullback, and in case the price recovered this zone, we have more calm, and we can expect the touch of this level. For now, I don't see some important volume here, but if we maintain this zone, we can say that we have in accumulation phase, and we can wait some markup in the market to try some buy opportunities. And now I'm going to take a look, of course, at euro dollar, because euro dollar maintained the same situation of gold. We are joking in this zone between 1.1581 and 1.1787. I expect biggest movement from tonight, of course, with the meeting of Fed until Friday with the job number. And we know that here we have assist a preparation of great, sorry, a great trend. Of course, I would like to remember that we don't have any important volume here, and we know that that we are in August. It's a complicated this period, and in indexes we have a very great volatility in forex minus. So for now, today I suggest to take a look at this zone in 1.1750 to start to try some intraday or fast intraday entry, and for short, at least we have to lose this zone here in 1.1643. the market waiting the Fed decision, and it's normal to assist at this choppy range. We are going to take a look only to roughly to pound, because we know that in March of next year we start the Brexit. We have a lot of problem with negotiation between the UK and European Union. We have assisted a sort of selling climax here in 20 of the July, and we can say that if we don't lose this zone in 1.3074, we can assist a new uptrend here in today or the next day. So my idea here is to wait at least the touch of this intermediate resistance here of 1.3172. And in case we have strong breakout, we can try to touch this zone. This is a very important resistance. I remember that in case the pound recover and maintain this level, we can start a new uptrend. In case we lose this zone, take a lot of care, because we can assist a new bearish acceleration, and we can start a new downtrend with first target in 1.2909. We are going now to take a look, of course, at dollar yen, because I remember that in last Wednesday, I remember that this this red candle is only a moment where the trader closed the long trade, maintained from more of 2 months. We have assisted a strong respect of our first support here in 110. We have assisted new uptrend here. I have seen a lot of volume, so we can imagine that pound tried to touch this level. Dollar yen try to touch this level. For today, I strongly suggest to take a look if we maintain this level here in 102.15, because up this zone we can have at least a sort of possibility to have a new movement until this level. If we break out this zone, of course, we try to reach the 113, and in extension, our last target here in 113.82. Of course, we know that the market is a very complicated situation, and we can see a strong sell-off next week. So take a look, Docker, because for now could be very intelligent to take some advantage in a long way for the presence of news of meeting of Federal Reserve and non-farm payroll. The short, I suggest to start short only if we have a strong breakout of this level with target here in 109. Now we are going to take a look rapidly the Canadian dollar, because this we have assist another for the second time a double top here in our very important level 1.3290. If the price is going down and we have a breakout today this level, take a lot of care, because in case the price accelerated in the downtrend, we can have the touch of 1.902945, and in extension this zone. The long is logical to try only if we recover at least this level of 1.3177. Rapidly dollar pound yen, because I have seen a great accumulation phase here, and we have a lot of volume in this 2 point of in this double bottom. We have assisted this long candle, and now we try to reach this resistance here in 147. For now, I suggest to take a long view until the price maintain this red line on 146.17. If we break out of this zone, the second target could be this level in 148. In extension, you can appreciate the possibility to arrive here in 150. Now
we have one question from a participant. I guess you explained and described that quite good, but maybe you want to add something more. The question from one participant is live in the webinar. Hi, what is your approach to enter trades? if you'd like to add something more.
Thank you, Jens. My approach to entry trade is for Forex. I use these charts, 84 charts and daily charts. Take a look of the quantity of volume I see in the market. It depends on volume. I used to open swing trade, but in index, because it's more regulated market, it's more simple to see the volume. I working in scalping. I work in 1 minute chart in DAX, 5 minutes chart in the Standard & Poor, and 2 minutes charts in Nasdaq. It's very aggressive trading, but my strategy is based on Wyckoff ideas, and I have studied a lot, of course, how the algorithm machine is moving and work in the market, and with this basis I have created my strategy. I'm working only with volume. I don't use only this and price action, of course, because it's very effective for my trading strategy, because I enter only when I see some entry of institutional trader, algorithm machine, or bank of investment. In this case, the percentage of success is very high. We are speaking about more of 85%. But it's very important to be, my colleague call me sniper, because I enter only if I see the presence of the smart money. Is a very particular way to trade, but I have spent 3 years of my trading career to understand this movement, this view, and I can say that is very, very great.
And the best thing what you can do is take a look over the shoulder of our day traders. That's our slogan here, 5 days a week, 5 different traders, every day, 15, 20 minutes, roundabout. So we come to the end. Yeah, and to learn, look over the shoulder. That's what this webinar series is about. So every day, same time. And if you have not time every day to join, couple of hours later on our YouTube channel as a YouTube video to see. I have to say goodbye already, because 22 minutes already we are speaking here. The last minute from Giancarlo. Tomorrow is another day. Tomorrow is the day trader of today. Thanks a lot. And again, like to see if you see it again, couple of hours later on our YouTube channel available. Last words by Giancarlo. Thank you for today.
Thank you very much, Jen. I would like to say we see in September. You know, I have my small holidays, and I wish you good trading, and all have a great holiday. We see in the first week of September. A great hugs for all. Bye bye.